We are moving into the mid-afternoon on Wall Street, with a little under an hour to go before the close, and the tape has a couple of clear standouts. I'm Grant Mercer, and this is Storm Stock Solutions, here to bring some clarity to the chaos in today's markets. The clearest story this hour is GE Vernova. According to reporting from MarketWatch, that electrification and energy transition spin-off is ripping to record highs after boosting its long-term return outlook and outlining plans to return more cash to shareholders. That combination of better profitability targets plus a clearer capital return story is exactly the kind of thing institutional money tends to reward late in the year, especially in a market that's been hungry for real earnings, visibility around oil, grid, renewables, and power equipment. Another big upside outlier is Carvana. MarketWatch notes, the online used car retailer is in the middle of its longest winning streak on record, up nearly 50% over 12 straight green sessions, and now eyeing an all-time high as S&P 500 inclusion comes into view. When a name starts trading on index inclusion hopes, price action can become very momentum-driven. Traders will be watching whether volume and liquidity stay robust, or whether we start to see some profit-taking if that narrative cools. On the risk side, the macro conversation this afternoon is firmly on housing and rates. A MarketWatch piece highlights that mortgage rates are actually jumping higher, even as the Federal Reserve is widely expected to cut its benchmark rate later today. That apparent disconnect reminds everyone that the Fed controls overnight rates, but mortgages trade off longer-term yields and credit spreads. For housing-linked stocks and rate-sensitive financials, that's an area to handle with care until the Fed statement and press conference clarify how aggressive or cautious this easing cycle might be. Zooming out around housing, there are a couple of quieter stories that could matter more over time. One op-ed flagged by MarketWatch argues that a push toward ultra-long mortgages, even out to 50 years, is not a real fix for the affordability crunch and could actually strain retirement security. That kind of debate speaks to structural pressures in the housing market: limited supply, high land and build costs, and the tension between stretching borrowers versus building more homes. Long-term, those dynamics influence homebuilders, REITs, and consumer balance sheets. In the consumer space, Chewy is on my under the radar list this hour. Reporting from MarketWatch says its Chewy subscription and autoship programs are driving a growing base of what the company calls pegged customers, essentially lock-in, repeat business. Subscription and autoship growth can smooth out revenue volatility, and traders often look at that kind of model as a defensive consumer internet theme if the broader economy slows. There's also an interesting strategic piece on dividend investing out this hour. MarketWatch's Mark Hulbert notes the classic dogs of the Dow strategy has underwhelmed lately, and he discusses an alternative timely 10 concept. It's not a call to buy anything specific, but it does highlight how income-oriented investors are rethinking how they hunt for yield and total return in a world where cash already pays something, and bond yields are still in flux. Finally, the ongoing AI arms race remains a background hum for big tech. MarketWatch reports Google's Gemini is growing users at about 6 times the pace of ChatGPT, even though ChatGPT still leads on absolute numbers. For the mega cap trade, this keeps a spotlight on who can convert AI usage into sustainable revenue and margin. That's the bigger question investors will be pressing across the next few quarters. Into the next hour, all eyes turn to the Fed. The rate decision, the statement language around future cuts, and any change in the dot plot. Watch how that interacts with mortgage rates, financials, housing-related names, and those high beta winners like Carvana that have been running hot. I'll be back around the closing bell to break down how the market ultimately digests it all. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady. Blah.